that we have done similar work before.
All right, on that note, we want to switch gears now and have that conversation around the role of asset management in market liquidity. Now, to help me with this conversation, I'm joined this afternoon by Humphrey Gavumu, who is the Managing Director, CAC Asset Management. Welcome to the show.
Thank you. Pleasure to be here.
All right, so first things first, I want you to get your own assessment. Do you feel that there is a relationship between asset management and market liquidity by extension?
Absolutely, absolutely. I think market liquidity is driven by savings, and as a country, it's one thing that we need to really improve our savings rate, which will then form the base for investment, for trade, and many other things. So as an industry, I think we play a vital role in mobilizing these savings and then putting them in a form that can then be intermediated to other players who need capital and liquidity.
When you look at asset management within the Kenyan context, do you feel that we have gotten to a place where we would be considered a mature market?
Absolutely not. We've made great strides, though. We're still considered as a frontier market. So if you compare us with, say, our African peers, you'll find other countries a bit ahead of us, like South Africa to a certain extent. But within the region, we are definitely ahead. And there's a lot of financial inclusion that has happened within the industry that puts Kenya really, really high in ranking globally.
All right, so, and now to bring this home to particularly CIC, when you look at something like the fund expenses to capital ratio, so this is the one thing that, of course, so many people would want to understand. How then, by running a fund, an asset management fund, how then do you make money as an institution?
Well, our main role is really mobilizing savings, like I mentioned earlier. And so what we do is that we bring together all these millions of individual savers together into a platform, which is essentially a unit trust or a CIS, and which is also regulated by the Capital Markets Authority. And via that vehicle, we're able to give access to the millions of these savers to very, very good, attractive, and safe returns which they would ordinarily not get on their own. This return is also a net of all fees, charges, and commissions that are applicable. So what you see is actually what you get in your wallet or account at the end of the day. So essentially we play, as I said, a very, very vital role in mobilizing and, in a sense, democratizing access to investments to millions of people.
All right, so Humphrey, of course, you currently run a fund, and one of the things that I'm sure a lot of investors would want to know is what is your fund's expense ratio, and then how does it compare with other funds in Kenya and in the region?
Money market funds typically charge anything from about 1.5 to about 2%, so we are in that particular region. But I guess the focus is not really so much on the fees, on the expense ratio, but rather, one, the return, but also most importantly, it's the safety and security of the funds that you've placed and entrusted with us, and more importantly, customer service. So when you entrust your funds with us, you've got multiple touch points that you can engage with, via M-Pesa, via online portals, via an app. So customer service, I think from recent surveys, has been given as perhaps one of the greatest incentives to invest with an asset manager like CAC, followed by the safety and security of funds.
All right, so can you talk about your net asset value at the moment? And when you look at the last 5 years, how has it been performing?
We've seen great and tremendous growth in our business over the last 5 years, which has led us to be the top in terms of both market share, size of the company, and profitability. I think we closed the year at just under 60 billion Kenya shillings entrusted to us by ordinary Kenyans in the CIC Money Market Fund. We've seen a very, very strong growth in the last 5 years leading to this particular point.
All right, so of course, for a lot of investors and anyone who would want to put their money in a money market fund, the first question that they want answered is then, what is your investment criteria? What are some of the things that you look at before undertaking a specific investment?
Absolutely, that's a great question. The first thing you should start with is, of course, your own, I would say, investment objective. Why are you saving? Is it to buy a house as a deposit? Is it to maybe go on holiday? Is it for school fees of children? And that, I think, will inform the the risk that you're willing to take, and as well as the return that you expect to earn, that is. So of course, as you know, there's a balance between risk and return. So that will be, I guess, the biggest consideration. And then once you've identified and narrowed that, the next step is identifying a partner, such as ourselves at CAC Asset Management, where you can entrust your money with us for it to then grow and enable you to meet your objectives. So I think those two things, and as I mentioned earlier, the ease of access to our fund via the various platforms is really one thing that makes us stand out from the rest.
All right, Humphrey, can you take us through a breakdown of your investment portfolio? How does it look?
Okay, so the investment universe in Kenya is characterized by things like treasury bills and treasury bonds, and we're invested in those. As you're aware, they're offering attractive returns. We're seeing T-bills earning up to 15%, and bonds coming a bit higher than that. The other part of the investment universe is fixed deposits and call deposits within the banking sector. There's also commercial paper and corporate bonds, though as we've seen, these have not had a great uptake in the recent past, but we're starting to see some appetite coming back onto these particular investments. And then there's a new and exciting category that we've seen, really coming up, and this is in the form of securitized deposits and sort of like derivative products. We found this to be also quite attractive and a very growing niche that we've also been adding onto our portfolio. In essence, all these are very safe and secure investment options that essentially give you, the saver and investor with us, a very safe and secure return.
All right, so speaking of investment options and the question of security, one of the biggest concerns for a lot of investors at the moment is the question of high interest rates. There's a lot of volatility in that space, particularly going based on what is happening globally, and also just looking at some of the macro factors here in the country. So how do you manage credit risk in as far as high interest rates go?
Another great question there. From a credit risk perspective, as I said, we haven't seen much of an uptake to risky products like commercial papers and corporate bonds. And this is simply because we can get essentially a risk-free rate in the form of treasury bills at about 15% from the government of Kenya, and about 18% from treasury bonds, again from the same Kenyan government. So with that high interest rate in mind, there's little incentive to take credit risk at this point in time. Again, overlaying the tough economic conditions that we're seeing at this point in time. From a volatility perspective, the way we manage this is we do very detailed and forward-looking research onto expectations and conditions that we think will prevail over the next, medium term, so the rest of the year and early part of next year. And from that, we then position the portfolio to take advantage of the yield curve. As you may be aware, we're seeing much higher rates in the short-term end of the curve, and that is essentially where we're placing our money in. And that way helps us protect us from the volatility that comes from rise and fall in long-term interest rates.
The other thing that I'm sure for a lot of investors is an issue of concern is things to do with liquidity position of a fund. So help us understand from where you sit, what is your current liquidity position, just to be able to know that does this then inspire confidence to investors, and also looking back from the beginning of the year to where you are at the moment.
Absolutely. I think it's important to note that, one, we are a regulated entity and our product is regulated by the Capital Markets Authority, and in there are certain guidelines and prescriptions that we adhere to. But also more importantly is the fact that given the size of the fund that we have, there's a very strong liquidity component that is there, that is placed in easy to access investments such as call deposits and fixed deposits. The second point is that we usually ladder our portfolio so that you can have maturities at every other time, and you do not necessarily have to uplift or break investments before they mature to be able to meet liquidity concerns. So that is something that is very well taken care of. Our liquidity is in the double digits as a percentage of the fund. And then again, liquidity is important to investors because it is at the point of withdrawal from our fund, that you, the investor, will realize and see that the trust that you had placed within CIC Asset Management was well placed, and your funds are ready for you to use as and when you would like them back.
So Humphrey, of course, investor sentiment is key, particularly when you're running a fund. So one of the things that, of course, I would want you to help us be able to make sense of, when you look at some of the investor behavior over the last year, what do you see are some of the products that are currently attracting a lot of investors?
We've definitely seen a flight to safety and a flight to quality, and this is not just a Kenyan phenomenon. We've seen this, globally in some of the markets that we track. And essentially, this is something that we see when conditions are volatile, when inflation is high, interest rates are high, exchange rates are also depreciating at a very, very rapid rate. We're seeing high unemployment, poor business conditions. In those environments, cash is king, and we've seen a lot of our very savvy investors doing the same, and our products are very, very uniquely positioned to serve that need. In the portfolio ourselves, we've also prioritizing cash and short-term instruments to be able to take advantage of emerging opportunities as and when they arise. It is at times like this where you need to be able to have, a hoard of cash that you can then deploy, whenever you see opportunities that are rising.
So Humphrey, of course, the question of depreciation of the shilling is a big one, and particularly when you look at what is happening within the FX market. So in terms of this depreciation of the shilling, how big of a dent has it been to the business?
Actually, it's been a great positive for us because one of our products is uniquely positioned to address this need, and this is our CIC dollar fund, which invests in dollars, and currently we are paying about 5.6%. And we've seen a great uptake in this product, particularly for people who have got need for dollars. So for those who've got kids who are going to university abroad, it's a great place to place your money. For those who have got import requirements where they need to pay in foreign currency, again, the very, very same thing. And also for those who just want to save in a hard currency and protect themselves from the depreciation of the Kenya shilling, we found that it has been a great product. We've had a very, very strong growth in that particular product, and hence it's been a great opportunity, we think, for us. And this shows that the product is uniquely positioned to meet the needs of a certain niche of investors.
All right, Humphrey, of course, in about 30 seconds before we wrap up this conversation, I just want you to help a new investor, an entry-level investor. Why should I put money in a money market fund? What are some of the positives, or how does it benefit me?
Like I mentioned earlier, a money market fund is essentially a pooling together of various investors into a vehicle that then proceeds into the market to be able to place those funds and essentially attract wholesale rates. And there is the biggest reason why you need to invest in an asset management firm like ourselves and in the CIC money market fund, because you'll be able to get rates that you would ordinarily not get by yourself should you approach other financial market intermediaries. The second thing is with the size of fund that we run, liquidity is assured. So as and when you need your money, as your investment objectives mature, as your needs crystallize, you'll then be able to have your money with us. And then finally, customer service is key. We've got many and multiple touch points, and that's a great consideration of why you should be able to access your money once invested with us. Thank you.
All right, thanks so much, Humphrey. And of course, that's a good place to end it. But like we always say, particularly for those investors, do your due diligence before putting money in any money market fund. Make sure that you have done your homework to know that this caters to the needs that you have. And of course, on that note, that's how we wrap up Business Today this afternoon. Livestream KTN is up next.